What's going on, guys? In this episode of Should I Invest, we're going to be talking about AFRM as it's recently been making some nice moves. We're going to dive in and see if this is something that we should consider for our long-term portfolio. So without further ado, go ahead and smash that like button, subscribe, comment down below what stock you want me to do next. I do these videos on the weekly and I post them right here on YouTube. All right, so with that said, let's go ahead and get started. I got my handy dandy MarketSmith tool right here. You can see all the details about the company right here on the screen. The ownership, the fund ownership, everything is all right here at our fingertips. I also have my handy dandy Excel sheet right here that's going to tell us whether or not this is a pass or fail. And of course, we have Yahoo Finance. So with that said, let's go ahead and jump right in. Let's grab our handy dandy Excel sheet, put in AFRM, let the data do its work. You can see EPS already a negative number, and because of that, PE is going to be an A. All right, so let's look at return on equity. So return on equity is going to be right here on this box right here. And of course, because of the negative EPS, we have a 0 as well. All right, so we're going to dive in and look at the total debt to total asset ratio. All right, so let's go ahead and pull up Yahoo Finance. Let's go to balance sheet and let's scroll down to total debt. All right, so total debt right here, 5621. We're going to put that right here. And then let's look at total assets, which is up here. So obviously a positive figure, which is good to see, 1.45. Now let's look at current debt. And to look at current debt, we have to come here and look at current liabilities. Oh, all right, we're going to plug that in, and then we're going to look at current assets. All right, so we're going to come up here. Wow. That's a significant number. Probably the biggest I've seen on the sheet here. So we'll have to probably re-verify this number. Let me double check this total debt. Yeah, so there it is, 47. That means they can pay off their current debt 47 times, which is pretty astonishing. All right, so there's a surprise there for us. Next, we're going to look at operating income. To do that, we're going to go to income statement. We're going to come down to operating income. We're going to plug that. It's a negative number here. And then we're going to look at total revenue. Total revenue is right here. We're going to plug that in as well. And it's 50%. So the income statement does not balance, which is another red here. And we already have a few red points going into this already. Right? So next thing we want to know is the cash flow increasing or decreasing? All right. So let's go ahead and look at that. 92, 201, 225, 108, 65. So in the last 3 quarters or the trailing 12 months, you can see that it's actually increasing. That's a positive. Let's look at owned by management. Okay, so we're going to come here and look at MarketSmith. Let me move this over so we can actually see the chart. All right, we're going to come here and look at management right here, ownership. So management owns 3%. Which is good to see. We'll put that in right here. And then we want to see, are the funds increasing or decreasing their position size? All right, so let's go ahead and look. So from December 2021, you can see right up until December 2022, they've actually been decreasing, right? You can see the numbers right here. It's been decreasing. Now, there's a slight shift from June 2023 to September. They've increased a little bit here from 407 to 432. All right, so it is a little bit of an increase, but obviously it hasn't increased for the last few quarters. The only thing is here, if you're catching a move that's kind of slowly picking up, this number is going to probably start showing in the next few months where you'll see the funds kind of coming in. So you might be at a place where you're kind of catching this early. So to answer the question, are the funds increasing or decreasing? You know, there's more decrease than an increase at this point, so we're going to have to put decreasing. And right off the bat, because of all the negative EPS, and right off the bat there's 3 red marks here, it's going to be hard to get a pass on here. So it has failed, but what I do like about this is the technical side of things, right? You actually have a rounding bottom that's set up here and a strong weekly candle. Right, so you might come into some resistance here and consolidate at that 40 level. Not to say this is where you load the boat and expect to move to 160. What you want to do at this point, if you do find value in the stock, what you want to do is possibly start dollar costing average somewhere between 40 and around 16. Okay, you want to start dollar costing average here, as it looks like it's kind of based out nicely here. Okay, now let's take a look at the daily. You can see daily as well, right? Nice long rounding bottom and slowly starting to pick up. These volumes here, you have quite a few consecutive days of volume above average and holding up and not just decreasing, right? They're steady, strong days. And it really started down here on, August 25th. This is where you started seeing these spikes, a few of the buy spikes here. And then ever since then, there was more selling pressure than anything. So something to keep in mind. If you guys aren't familiar with, the rounding bottom is a significantly bullish technical analysis. So take a look at that and understand that as well. But as of right now, the tracker gave us a fail. Technicals look good, maybe even for day trading. We've taken advantage of this in the day trading room for some time now, as it's been pushing in the last week or two. But for the long term, you might want to find some consolidation, some pullbacks, and dollar cost average in that range that I mentioned. All right, so hopefully you guys did find value in this. If you did, go ahead and smash that like button, subscribe, and comment down below what video you want me to do next, and I will be more than happy to do so. Thank you for watching. We'll catch you on the next one.